everyone. We're here again with another episode of Let's Talk Real podcast. And I'm here with Kelly. Hi, Kelly. How are you?
Good morning. I'm great.
Awesome. So we're excited for today's episode because I think it's going to help clarify a lot to a lot of people moving into the year 2023. But before we get into our topic, I know Kelly wanted to recap our last episode where we talked all about first-time home buyer grants here in the local counties. So Kelly, I think you had something to clarify for us.
I did. So we talked about first-time homebuyer programs that are available for York, Lancaster, Dauphin County, and Cumberland County. York Lancaster is tenfold, and with the tenfold, there's different criteria for each one. And if anybody needs to know that information, I can get that out. And Cumberland County and Dauphin County, same thing. There's different criteria for each one. A lot of the stuff that's similar is your first-time home buyer, what's considered a first-time home buyer, the fact that you get the grant money to go towards closing costs and down payment. The one thing I wanted to clarify was that the requirement for where you have to live for Cumberland County, which I didn't have last week. And as long as you've worked or lived in Cumberland County for the past 6 months, you are eligible for that program. In Dauphin County, there's no requirement. And in Lancaster and York, they want to see that you're living in Lancaster or York County for at least 2 years. So there are some exceptions to the rule, but that's the basics when it comes to the requirement for that program where you have to live. And awesome. I just wanted to go over that.
No, that's good. I think there was a lot of people asking about that, like especially for Cumberland County, because we didn't know. So this is good information.
Mm-hmm.
Okay. So the topic of the day, we're going to be talking about getting yourselves ready to buy a home in 2023. And there are 10 steps that we're going to be going over to kind of clarify a lot of questions that we get, the more common questions we get in order to purchase a home. But we're going to start with the myth of the day. And that is kind of built into our steps as well. And you're going to understand why we chose this myth. So the myth of the day is that you're supposed to find a home first, and then you apply for a mortgage. But that's not right. And we're going to go in detail and explain why exactly, right, Kelly? They usually do backwards. It's too easy nowadays to go on Zillow, go on Trulia, and start looking for homes. And you should know what's available. You should know what you like. But to really start looking for homes and seriously shop, to purchase a home, there are other steps that need to come before you find the home you want to buy. And the reason for that is that if you find a home that you really love and you're not ready to buy on the timing, depending on the timing it takes to prepare to buy, you might not be able to, you might end up missing the house that could potentially be the house of your dreams. So to avoid that issue, we're going to explain to you what are the steps, what you should be doing first, and not just find a home and not be ready.
Correct.
Okay, so getting ready to buy a home in 2023. Step number 1, get your credit score up. Kelly can give us some, tips and tricks of how you can work on that, and ideally where you should be if you want to start looking for a home. Right, Kelly?
Yes, absolutely. Absolutely. So the minimum requirement for most of the products is a mid-credit score of 620, and which means we pull most companies, including us, mortgage companies, that is, we pull from 3 credit bureaus: Experian, TransUnion, and Equifax. And the mid score is what we look at and what pretty much any other lender is going to look at as well. And if it's below that, not saying that you can't get a loan, because there are some lenders out there that would lend on that, but your profile is going to look better if it's at least 620 or more. Couple tips are, if it's not there, take a look at your debt, take a look at your credit cards. If you have credit cards that have an annual fee on it, get rid of it. Pay it off. And once you do pay it off, keep that paperwork because a lot of times when your credit gets pulled for a mortgage, it doesn't always show that it's been reported. But if you have the paperwork, you can say, well, here's my documentation that I paid it off. If your credit cards do not have an annual fee on it, hang on to them. Creditors want to see that you're using your credit. You have to make at least your minimum payment. But if you need to pay it down, the average percentage you should pay it down to is 30%. So if you have a balance of $100, you want to pay it down to $30. You don't necessarily have to pay it completely off. Like I said, creditors want to see that you're using it, but also making your payments on time. And as you do that and you pay things down, it will just increase your credit score.
And talking about the usage, just to kind of chime in that as well, it is important that you do use the credit cards, right? Just having the credit cards there, it's not necessarily going to help you boost your score as much. So use the credit card for groceries, use it for, stuff that you have to do on a daily basis with gas, and then just make sure you're always paying down completely if you can, or if you're not, like down to 30%, like Kelly said. That revolving credit is going to actually allow you to possibly even increase those credit amounts from the creditor to you, and then boost up your credit score even further within the time you're using it.
Mm-hmm. So that's my little take on credit cards. There's more details that we can go into, and if you have questions, please feel free to reach out to me. My phone number and email is here. I'd be more than happy to go into more debt questions. But the one thing I have noticed is if you have a car loan, let's say you want to, get your debt to income ratio down because you figured out what it is, but you have a car loan, I highly recommend not paying off your car debt. If you pay off a car debt, it will bring your credit score down. On average, that is usually what happens. So if you do have a vehicle, pay on it. I'm not saying, you can pay a little extra on it each month, but do not pay it off, because if you pay that off, it will hurt your credit. And sometimes, depending on the credit, if it is a credit card or a loan, that may hurt your credit, but more than likely not with credit cards. Like I said, it's good to pay them down, but you want to look at your credit cards to see if you have any that have that annual fee, because there should be no reason why you're paying an annual fee on a credit card, because there's so many credit cards available to people nowadays that don't have those fees. So those are my couple little tips on credit. That should help you.
Thank you. I think that's going to help a lot of people. And I didn't even know about, making the pay off of the car loan.
Yes,
people have to do that, but didn't know you actually reduced it. That's interesting.
It does.
Yeah.
It does.
That's funny. Well, that's the step one. So if you think your score is not quite to that 620 yet, that's what you should be kind of focusing on to put yourself in the best position as possible to become a buyer, and get pre-approved to purchase a home. So the step two would be to determine how much you can afford. And at this point, it's really just budgeting, right? Your personal budgeting, making sure, okay, how much can I actually afford on mortgage payments? And I think it's important to understand what the mortgage actually encompasses, because it's not just the principal and interest of the bank. You also include the real estate taxes for that property. It will include your homeowner's insurance into that amount as well. And it does not include your utilities. So you really have to kind of budget in a way that you're taking that into account, and it's also including your utilities that you're going to have with that new home. Because if you're renting right now, chances are you're not paying for all utilities, or you may be, I don't know, it could be different, but you have to take that into account. And also if you are going into a homeowners association type of property or a condo property, you have to put into your budget as well that HOA fee or condo fee that you may be having with the new property. So really understanding that budgeting, and then also saving money to purchase a home, that would be falling into the step as well. And I think Kelly can give us some insights of how much exactly you should be kind of trying to save in order to be better prepared to purchase.
So absolutely. When it comes to your savings, you also kind of want to see, well, what purchase price of homes am I looking at? Now, again, we do offer, like we went over last week, our first time home buyer programs. There are programs where you don't have to put any money down. The least possible that you would have to put down on any of our products is 3% with our conventional first time home buyers program. And so if you're a first time home buyer, 3% is what you want to be looking at, or I would say 3 to 10% is a good number to start at. So if you're looking at a purchase price of $100,000 and you want to put 3% down, that's $3,000 right off the bat. And then you also need to think about closing costs, because a lot of people think that, well, I have my $3,000, that should be enough to purchase a house. Yeah. Unfortunately, it's not.
Yeah. There's cost. There's things associated with purchasing a home.
Yep. So there are lender fees, they're minimal with us, but then the majority of your settlement charges are through the title company, through the settlement company. So, and they can be several $1,000s, and a lot of people don't realize that. So, if you're looking to purchase a home for $100,000, 3% down, you have your $3,000 that you'd have to put as down payment, but then you're probably going to need at least another 5 to 7 on estimate with $100,000 purchase price of a home. There's a lot of things that go into play with it, what the taxes are, what your homeowner's insurance are, mortgage insurance, depending on the product that you choose.
Credit insurance, which a lot of people don't even realize it, but it's mandated by the state, and it's set amount based on the purchase price. So you have your transfer tax, which is 1% of the purchase price always, no matter what.
Yep.
So there's quite a bit that goes into it. Maybe in another episode we can actually explain every single thing that goes into the closing costs. That would be a good
I think so.
To break that down. Maybe another episode then we'll make a note. There's quite a bit that goes into it. So I think overall, what Kelly's trying to say, depending on your down payment, right? Because that will vary based on the loan product that you're using, and not counting any grants, right? Not thinking of any potential first-time home buyer grants you may be getting. You should be expecting between 5, considering closing costs, right? 5 to 10% of whatever purchase price you're going for. I think that's a safe, like 5% would be closing payment, I would say. Now, if you're able to get grants, that could potentially go down to $1,000. So it really depends on what you are able to qualify for. And that's why it's so important to go into step number 3. Once you think you have a little bit of money saved and you have your credit score where it should be, that's the time you should be going to a lender and finding out what kind of loan product you can approve for, what would be potentially the grants you can qualify for. So you really know how much money you need and what kind of home you can qualify for, because different loan types will require different property types as well. Not all loan products are able to qualify for all types of homes. One example I can give, not to confuse anyone, but if you are qualifying for an FHA loan, for example, which is one of the most common ones for first-time home buyers, you're probably not going to be looking at condos, because condos have a different type of ownership, and FHA not always qualify condos for the FHA loan. There are exceptions, as always, and your lender or your realtor can verify on that for you. But that would be, an example of potentially a property type that doesn't apply for you, a loan type. Mm-hmm. So that's why it's so important to go to Kelly and find out exactly, what could be your approval for, right, Kelly? And you can be more insights into that step as well.
Yes, and the pre-approval process is very easy. That could be something else that we talk about on one of these episodes, is just the pre-approval process. Yeah. But there's a couple different ways to do that. When I pre-approve somebody, we are pretty old school. We get, 2 years W-2s, 1 month of bank statements, and your 2 most recent pay stubs. Now, our loan system, like I said, we can go into more detail. Sometimes I can pull some of this information automatically through our loan system. If I do, I don't necessarily have to collect all those documents, but I prepare everybody to be prepared with that information for pre-approval when it comes time, because that's, then it's considered a little bit more official having all those documents versus not. But yeah, it's the pre-approval. I mean, I can pre-approve somebody in an hour sometimes, if I have all that
And
information.
how quickly they are with you too, right? Because they have
Exactly. It all depends on, everybody has to be
working
equally,
together.
they have to all participate equally in order to get that done within the hour, but it is possible,
And I know we have made it happen because, we always have that one buyer that will do things backwards and find the home first. And then it's like, oh my gosh, I need a pre-approval by 5 p.m.
Yeah.
So, and we've been there, you and me together, and
Yes.
having all this through. But it is definitely a team effort. So to make things easier, please follow the steps we're giving you, because it will make the home buying process so much more smoother and stress-free. And that's what we're trying to create for you, is a stress-free, or as much as possible stress-free process as we can. And going through the right steps first it makes that much easier. So we can kind of help you feel comfortable with the process instead of having to just rush through things and then becoming a stressful situation. But
Yes.
the pre-approval definitely has to come before these.
Most realtors, Amini knows, most realtors will, if you have a borrower that's like, oh, they want to look at this house or these couple of houses, your first question is, do you have a pre-approval?
Yes.
9 times out of 10, they don't.
Exactly. And sometimes they're afraid. They say, like, I know, I want to see the house first, and then I'm going to get my pre-approval. And, we understand that people are fearful of providing any information, and, but that's the right step, is really to get your pre-approval first, because I cannot know. I'm not supposed to even be getting details of your finances, right? Kelly is the one that can do that. But I cannot know for sure how much money you have in your account, and I shouldn't be asking those questions. I should just know, okay, I know what you're approved for, the type of financing, so I can show you the properties that are qualified for that financing. So I'm not wasting your time as a buyer, and also not wasting my time, because what if you're seeing a home and you fall in love with it, and then we find out that the mortgage type you qualify for doesn't qualify you to buy that home. So that would be also heartbreaking. So we don't want to go through that process and then go through creating stress without having to. So get your pre-approval first. This step kind of falls together with the pre-approval, because I feel like usually the point that they're getting pre-approved, they already have an agent, or the agent usually is the one referring them to get pre-approved, because how things works usually. But you would be, once you get your pre-approval, it's really to find an agent that you like, trust, and you can count on. And then once you have that agent, that's when you start your step 5, start the home search process. And I know a lot of people, that's the step 1. But when I say step 5, start home search process, that's like the seriously shopping, right? Now you're actually looking, scheduling showings with your agent, going to see those properties in person. And, if you like it, you're ready to put an offer. That's the step 5 is when you're ready to go, get the ball rolling.
And once you have your pre-approval, if you're going to look at different properties, obviously there's going to be different taxes, different criteria on each property, and I can update that information in minutes. So, it's really simple just to repull. I don't repull credit. Once credit's pulled once, it does not get repulled again until your credit expires 90 or so days later. But it's never a repull credit. It's just We look at the new house, we look at the new purchase price, the taxes, all that stuff, because all that stuff goes into play with the pre-approval because the numbers have to work. But it only takes a few minutes to update the information.
Yeah, and that's why you do need to have a team working with you. Don't be calling the listing agent to schedule showing because they're not looking out to your best interest, right? So when you have a realtor working with you and you already pre-approved with the lender, now you have a team that is working on your behalf. So if you find your home that you're interested in, I can go with Callie and then we're going to run the numbers, make sure that the monthly payments make sense, that the house is actually able to qualify for the loan type you're going for, or maybe if it isn't, what are the other alternatives? Something that we can do about that, or maybe that home is in a location that can qualify for a different grant. We never know. So you do have to have a team working with you in the back end to kind of really support you in getting the best deal, the right house, and the right price, and you're not putting yourself in a situation that later on you're not going to be able to purchase the home, right? And you went through the entire process of wasting time, wasting effort there. So great point, Kelly, pointing that out. We're running the estimates. We can do that for any house at any time.
Yep.
Or every house every time.
Yep.
You want to see how the numbers would look like because they will vary. Real estate taxes can impact your monthly payments dramatically depending on how high or how low they are. So maybe you can qualify for more purchase price if the taxes are super low, or vice versa. Maybe Kelly qualified you for, I don't know, $250, and then the taxes are too high, and now you only really can qualify for $200. Or if the taxes are super low, you can qualify for $300 now. So really, those things we can look for you. Pre-approval amount is never really set because again, taxes changes, and we can look into that in each specific scenario for you. Alrighty, so we're gonna go into step number 6. So let's say that now you're pre-approved with Kelly. I started looking for houses for you, and you finally found the one house that you want to put an offer in. Exciting time, but also super anxious time, right? When you're ready to make that commitment of putting an offer on the property. So that step is really more with me. I will be working with Kelly to, again, run those numbers, get those estimates for you for the property to make sure that we are doing an offer that makes sense financially for you. But the documentation will be all done with me. I will be taking care of creating all the docs for that offer. I'll have you sign those documents, and then we'll send that over to the seller's party, meaning the seller's agent, and they're going to review with the seller. This process it varies depending on the market, because if we are the only offer on the table, we can kind of negotiate more. We can even try to negotiate something called seller's assistance. It is not a grant, but it's something that Pennsylvania allows us to negotiate up to 6%. For a conventional loan where you're putting less than 10% down, that is limited to 3%. But we are able to negotiate that assistance for you during the making an offer step. But if there are other offers on the table, the perspective of how we're going to handle the offer making might be a little different, because you might be wanting to try to be more competitive. And then that's when, if you want to offer more or do different things, that's when I can go back to Kelly and run the numbers again. Again, just to make sure that you are really comfortable financially to make that offer, instead of just kind of like, guesstimating and then maybe putting yourself in jeopardy. So we always double check everything on your behalf, and then we run everything by you before making this offer. This step is very important. We will be in touch with you a lot in every single detail and aspect of this. And we usually take about 24 to 48 hours to get a response from the seller side. Mm-hmm. In the previous market, we were seeing maybe a little bit longer time frames because there were so many offers, so they were extending the offer deadline for later, which was a nightmare. But we are not in that market anymore, and I feel like now that's why we keep saying it's a great time to be a buyer. It's because there's not that many buyers out there, and there's not as much competition. So you are able to really try to negotiate that seller's assistance on top of a buyer's grant, and get yourself an amazing deal on a property. And again, all of that can be done if you have someone, a team working on your behalf in the background. So that's for step 6. Do you have anything to add, Kelly, to this?
I don't think so. I mean, making an offer is more like you than me. I just come into play if you need some updated numbers.
Putting all the numbers for me.
So I really don't have anything to add. I think you kind of covered it all.
Awesome. All right. So, okay. So let's say best case scenario, right? Your offer is accepted. We got you a great deal. Now we're going to go under what we call under escrow or under contract, right? You're in escrow, you're under contract. Yay, congratulations. Then comes the step 7. One thing that I love to mention, because a lot of people don't know this, is that when your offer is accepted, there's something called an earnest money deposit, or just a deposit that is given within normally 5 days of the offer acceptance from the buyer to the seller's broker, okay? And a lot of people don't even know that this exists, but in Pennsylvania, we commonly see 1 to 2% of the purchase price being the amount required for this deposit. The deposit will be something that we're going to predetermine on your offer. So I will be talking to you about it when we're writing the offer, how much deposit you want to put down. But it really is just, what it means is that you're skin in the game as the buyer. How much you're putting down, because you're showing that seller that you committed to purchasing that property. And it's also something you could stand to lose if you just back out of the deal for no reason. And I think we can even go over some contingencies, which home inspection and home appraisal are what we call contingencies during a home purchase. So are things that are steps in the home buying process that will protect you as the buyer. And then if for some reason anything goes wrong during those contingencies, those steps, you are able to back out of the deal and not lose your deposit. I think that's very important to understand. A lot of people don't know that. So again, the deposit is due within 5 days of an offer being accepted. So only due after your offer is accepted and you're under contract, then you give that deposit to the seller's broker. The deposit is not given to the seller, it's given to the seller's agent. And then that seller's agent brokerage will keep your deposit into what's called an escrow account until the closing day, where your deposit will be deducted from your total due that day. So that is very important to mention. So we can go over now the 2 contingencies or steps in the buying process, which is the home inspection and the home appraisal. I'll go over the home inspection. Kelly will go more in detail on the home appraisal. Okay. So the home inspection, that is, as soon as we get on the contract, we usually have 10 to 15 days, depending on what we negotiated, to perform the inspections on the house. The home inspection is not a pass or fail. And a lot of people think like, oh, the home inspection, if the home doesn't pass the inspection, we don't buy it. No, it's not a pass or fail. It's the opportunity for that buyer to get to know the home and possibly negotiate with the seller repairs that may be needed, or that you, as the buyer, just would like it to see it done with your property. So it's an opportunity to negotiate. And I always like to say that, because it's not like the seller has to do anything in the property. It's just an opportunity to negotiate repairs. And those can be yes or no, right, from both parties. And that's why I say this is a contingency. It's because, let's say the buyer requests repairs, the seller doesn't want to do them. Now the buyer has the chance, the choice to stay within the contract and accept the property as is, or whatever the repairs the seller agreed to do, or they can back out of the deal, get the deposit back, and find another home. So this is one of the contingencies in that purchase process, is the home inspection. And again, not a pass or fail, opportunity to negotiate with the sellers. Now, the home appraisal is a little different, and Kelly's going to go in detail on that for us.
Yes, so your home appraisal is almost always required on the purchase of a home. Every once in a while, if you're putting 20% down, sometimes we can get an appraisal waiver. But there are a lot of things that go into play with that. If I knew the algorithm, I would share it with everybody, but I don't, so I can't.
Yeah.
But an appraisal is required on the property to make sure that the value comes in at what you're purchasing the house for. Sometimes it comes in below, sometimes it comes in higher. If it comes in higher, great. Then you already have equity in the property. If it comes in at the sales price, great. That's what you wanted. When an appraisal is done, an appraiser looks at homes that are within a certain mile radius around the home that you're purchasing that are similar, that have similar aspects, that the different things in the house are the same throughout for the most part. There's adjustments that are made, but then he compares the home you're purchasing to these other homes that have sold within the last few months prior to you purchasing this home, and that's what determines the value of the home that you're purchasing. So sometimes the appraiser will come back that the value is this and it's as is, and that means there's nothing that needs to be done to the house. Sometimes an appraiser, depending on the condition of the house, will come back and say, well, this needs to be fixed, this needs to be corrected, depending on the purchase price and the type of appraisal being done. There could be things that the appraiser comes back with that need to be done to the house. And that's where, if there are repairs that need done, that's when I would reach out to Nini and we would discuss with the seller and the buyer to see if the seller is willing to make those repairs.
Right.
They don't necessarily have to. Sometimes the buyers will offer to pay for it or vice versa. So that is an option. But the main goal with the appraisal is to have it come in at the purchase price for that step in the process.
That is correct. And then that's why I like to compare the home appraisal with the home inspection, right? So the home inspection is something that the buyer will, as a buyer home inspection, the buyer is going to be giving themselves the opportunity to negotiate with the seller. Home appraisal is something that the lender requires. So it's a requirement in order for you to obtain financing. And while the home inspection is not a pass or fail, I would consider the home appraisal a pass or fail.
Yes.
Mainly because if the appraiser requests repairs, because the appraiser will do their own little home inspection, not as detailed as a buyer's home inspection, but still do a home inspection. But if they say if something needs to be done, it will need to be done prior closing.
Yes.
It is a pass or fail in that sense. But is it still a negotiation between the buyer and the seller on how those repairs are going to be handled? Normally, and I say normally because it's not always, a seller will take care of those repairs because otherwise that buyer won't be able to finance that home. But if it's something too expensive, maybe they will come in terms and negotiate price changes, or if they're already giving credit, they're reducing credit or something like that. So it is a negotiation piece still. But again, normally the sellers will take care of those repairs because they are needed to obtain financing or not. And again, if for some reason they don't come into terms, that's the opportunity for the buyer to back out of the deal, and they do get the deposit back because that's considered a second contingency during that purchase process.
Yep, that is correct.
Awesome. Okay, so hopefully that clarifies a lot, because that we did go in detail on that. I feel like a lot of people always think that the home inspection is a pass or fail, and it really isn't. They don't understand, right, what needs to happen there. So that's great. So going into step 8, and just to clarify, step 7 kind of happens simultaneously. I'll be ordering your home inspection for you, like I said, within the first 10-15 days after your offer is accepted, and the home appraisal is basically around the same time.
Yep.
So we could be going through negotiations for home inspection and the appraisal also around the same time. So those are two things that are happening. Usually the appraisal takes a little bit longer, so we'll be done with inspections before the appraisal is back, mainly because that's a third-party service, and it does take a little longer, but they do get ordered and started around the same time. Step number 8, we need to get you a homeowner's insurance, at least a quote attached to your file. That's a lender requirement, right, Kelly?
Yes. Yes.
And we have someone that we love to recommend to all of our clients. And I wanted to put his information down here at the bottom. It's Bill Brennan. Bill, shout out to you if you see this later. But you are required to have a homeowner's insurance that's part of your lender requirements. It has to be attached to your mortgage throughout, the life of your loan. And like we mentioned before, that will be part of your monthly payments. So it's going to be built into your monthly payments of your mortgage. That's why you have to retain this quote before you settle. That way everything is done and paid off upfront during your settlement date, which again, we'll do an episode just for closing costs so we can explain what's included. But one of the things that is included is your homeowner's insurance. And you usually prepay for the first year. If you do need any insurance quotes, not just for home, for cars, for anything, Bill is your guy. We definitely recommend him. He is our favorite person ever to work with. So yeah, that's definitely a good recommendation if you ever need to obtain a quote for any type of insurance. But a homeowner's insurance is definitely something you need. And that's the step 8 into our home buying process. Now, let's say we are done with the home appraisal. We are done with your inspections. You have your homeowner's insurance order. We're pretty much like ready to go to close. Kelly's going to go into details on some the financing things that we need to obtain prior closing date. But one thing that I'll have to do with you is do a final walkthrough. So that usually happens a few days before settlement date, which we call a settlement date. That's the day that you can sign all your documents and pay your dues and you get the keys for a whole new homeowner. But before that happens, we do have to do a final walkthrough. The final walkthrough is very important for multiple reasons. First of all, you want to make sure that the house still looks the same way than the first time you walked around. Because you went through a showing, probably 15, 30 minutes at most. And you don't really get to see much during that time, right? So it's an opportunity for you to see the home again, maybe get some measurements so you can, order furniture if you need to. Don't buy anything before closing though.
Right.
Maybe we can do an episode about furniture. Don't take any loans. Don't buy any appliances because that can jeopardize your ability to purchase that home. So please do not do that. But get measurements so you know what to get after you close on the home. And also, again, to see the house is in the same condition, get your measurements. And then if we did do repairs in the home, that's the opportunity to go over all the repairs that were done or not, right? And then see if they were done properly. So this walkthrough is not just a walkthrough. We will be making notes if something needs to happen still, if some repair was not done or not done correctly, we'll make a note to the seller. And then we can either request, depending on the time frame, that those repairs be done before closing, or we can allow a few days post-closing for that seller to still take care of those repairs. So that's why the final walkthrough is so important. And that's our step number 9. Now, before we go to step 10, which is our final step, closing date, there's something we need to obtain from the lender side. And I know Kelly can give us details on the CTC and explain more details on what is needed before that happens and what happens after that.
So the main thing in order to get to that final walkthrough and to settle on the house is you do need your clear to close, your CTC. And with the clear to close, it means, your pre-approval was made official through our underwriters. They reviewed all the documents. They made sure that you could actually qualify for what I pre-approved you for, as long as nothing has changed. But like Nini said, don't buy anything because the underwriters will know.
They will.
and it could bump you out of being approved. But yeah, so we order the appraisal, Nini orders the inspection. We, as the lender, order all the title work on the property, because we need all that. We need the title search done to make sure there's no liens on the property. There's a lot of different things that go into play with that. And, even though your loan gets approved, there's always conditions. It's very, very normal. And they're usually minor things that we need to get done. Because there's a lot of paperwork involved with getting your actual approval and getting things finalized. But the main key is getting the clear to close from the underwriters, and everybody's happy when we see the clear to close. And
Everybody's like, woo-hoo!
so, and I let the seller's agent know, and I let Nini know, the buyers, I let everybody know that we are done on our side.
Yeah, that's right. And then also, once Kelly is able to issue you your CTC, your clear to close, that's when you have a final confirmed amount of what you need to bring to settlement. Because during the whole purchase process of your buying your home, we are only able to estimate numbers to you. We get pretty close, but it's always an estimate, right? Because we have to lock your rate in so many days before settlement, but there's also a final water bill, a final sewer bill. There's fees that go into it that has to be calculated by the day of closing. So we won't be able to determine what your final number is until we know for sure that the CTC is issued and we have a final closing date. On the contract, when we first make your offer, we do have an estimated closing date that we put it on file, and we try to stick to that as much as possible. For the most part, we do, but there always can be changes, or something goes, not wrong, but like something gets delayed during the buying process, then we might have to extend it, or it could even happen sooner, which Kelly is amazing about allowing deals to close sooner, which you always love that. So that will determine the final number, and then Kelly will give that number to you so you can come to closing, which is our step number 10. You're closing on your home, the closing day, settlement day. There's so many names for it, but that's the day you're going to be paying your home. And Kelly is able to give you that amount right after she issues the C2C and settle all the numbers with the title company, which I think would be great for us to do an episode with Leslie, so she can go over everything title related, because there's a lot that goes into it, so people understand. The buyer is really dealing a lot with the title company throughout the process, because they have to make sure the property is free of any past debts, liens on the property, and the title company does an amazing job just clearing all of that before you take ownership. So we can do a special episode for that. But so once they settle everything with the title company is the actual person that will come to closing and will be your closing officer for the day. You will be signing a lot of paperwork. So I always tell my clients, bring your rested wrist, your ID, your check. And to clarify, how do you pay your dues on closing day? Kelly, you can tell us.
You always make your check payable to the title company. You don't make it payable to the lender or
Not me. I don't want your money. Not that way, anyway.
Not the realtor. Not to us. You make it to the title company, because that's who takes care of all the money when it comes to paying off the seller's loan with our new loan. They take care of all that background noise.
Yeah, they're the ones that are allowed and responsible for distributing the funds. So the seller never gets any money directly from the buyer. The seller's agent don't get money. I don't get money from the buyer, and Kelly doesn't get money from you. So it's all done through the title company. In Pennsylvania, that's how the regulation happens, and I feel like that's probably the best way. I know some states it's a little bit different, where the seller actually gets money, and that can become a headache. So thank goodness Pennsylvania is not like that. It's all done through the title company. The only thing that gets held by a different party is the deposit that I mentioned prior, and that's held by the seller's agent brokerage. But on the closing day, that agent will bring that deposit, or they might even send it to the title company directly. And then once the title company gets that, they disperse everything else to everybody. So the seller will get that portion, the bank of the seller will get paid off, Kelly will receive their part, the seller's agent will receive that commission, I receive my commission, but always done through the title company. And then how you can pay your dues. Can you explain that, Kelly? What are the acceptable payment types? Because a lot of people think, if I bring cash to closing, how does it work?
Oh, so with Leslie, I'm just going to use her as an example because she banks with a certain bank in our area. And so with her, you either need a certified check from your bank, unless you bank with the same bank that she uses, which I believe is Fulton.
Yeah.
Then you can just issue a regular check. But for the most part, you need a certified check from your bank with the amount that either I provide to you or sometimes the realtor has it.
Sometimes I give it to them, or sometimes it will come directly from the title company.
Yeah, the only thing that may change that number from the time I give it, once I have the clear to close, is sometimes the escrows, like with water and stuff at the property, they don't always have those numbers immediately, especially since we get our loans clear to close so early.
That's true.
Sometimes those numbers aren't, but that's okay. Everybody should bring their checkbook to settlement. Mm-hmm. So if the settlement charges are off, and it happens, but if they are off, it's usually only by a few dollars, which you can pay with a regular check. So everybody should always bring their checkbook to settlement, just in case that happens.
That's right. Yeah, and you also have the option to do a wire. Sometimes, depending on the amount, that's what we recommend. Especially if someone is purchasing a home in cash, bringing a certified check can be a little scary, right? Because you're carrying, I don't know how much money in that check. So we also have the option to do a wire. And if you do decide to do a wire, something to really stress is that don't just receive an email and do the wire based on the email information. Even if you think it came from me, even if you think it came from Kelly, it doesn't matter who. Always call us to confirm that information. There's a lot of hacking happening, unfortunately, with wire, and they target title companies, agents, and lender companies because they know we're dealing with cash purchases or a lot of cash. Revolving cash. So if you are going to be doing a wire, if you think it came from me, call me and say, did you actually send me this? Is this the correct information? And I'll tell you yes or no. And then you go and set up that wire. That is huge. There's a lot of wire fraud happening. So please call before you do anything. Yes. Talk to a real person.
If somebody decides to do a wire, I always have them get in touch with the title company immediately, and just to correspond with them.
Details. Yeah, correct. Yeah, it's sad but true. It happens a lot.
It does.
So the day of closing, what you can expect is to bring your dues, bring your ID, and you're going to be signing a lot of documentation. Kelly's packages, I'm going to tell you, it's much easier. I've seen some lenders require you, the buyer, to initial every single page, and that can be a lot on closing day. Usually we can be done with all the documentation within 45 minutes, but depending on the lender, that could be an hour and a half. So I can tell you Kelly's packages are really easy.
Ours are, I think our fastest was 15 minutes. I think we got one all signed, but the seller wasn't there, so there was some other things to play with that.
Still 15 minutes, that's pretty awesome. I mean, government loans are always a little more, that's expected. Conventional loans are a little quicker, so we always say 30 to 45 minutes. That's the expected closing time, unless we have talkers in the room, which sometimes it happens and it can be an hour. But if you don't know how long it usually takes for you to do a closing day or settlement day, I would say usually no more than an hour. So you can reserve an hour for your settlement day. And then that day, once you're done signing all the documentation, you get your keys and you're ready to move in. Ownership starts at the moment you walk out of the settlement room, unless we have something else, agreed upon. Normally you get access to the property right away. It's your home as soon as you finish signing those documents. And that's it for the 10 steps. We did go a little over today, but I feel like that's important because we did have the steps and the buying process, to really go in a summary. It's quite a complex. We didn't even get as much in detail in some things. but we can make dedicated episodes for those things like the closing costs that we talked about, the title company portion, because those are going to be, episodes of their own, and we'll do that for you guys. But today we just wanted to really give you a full picture of what to expect, how to prepare, understanding what the steps are, really understanding the buying process. I usually do buyer consultations, and we'll go in detail on these steps together. So if you would like to sit down and have further questions, I'm more than happy to do buyer consultations with you to understand your situation. I also like to learn what you're looking for, right? Because during the home buying process, yes, you can be searching online, but if you have an agent, I'm able to really search and narrow down your search furthermore to give you access to properties that may not even be active yet. That way you know what's coming, and be the first person there if you're already qualified and ready to go. So you're not wasting time, you're not allowing too many people to see it, so you can be the only one there. So if that's what you want to do and get started, get in touch with me, get in touch with Kelly. Again, pre-approval first.
Yep. Now's the time to get ready for the spring market. So December, January is your time to reach out to me and to Nini to get ready for the homes that are coming up, because the spring market, there'll be more homes coming available. It's very typical of that time of year. But now's the time to reach out to us.
Yes, get started, get ready now to understand your situation specifically. And hopefully we can get to the market sooner rather than later, because, we mentioned this before. Springtime is when everybody wants to be out because it's nice out, the sun is out, the tax returns are back. But it's also a more competitive market. So if we can get you in the market prior, we will. Not that it's a bad time to buy. It's always a good time to buy. It's the right time for you. But springtime can be a little more competitive. So if you're able to get in sooner, and we can help you get there, we will. So get in touch with us and let us know, and we'll do our best to get you there as soon as possible. And I think that's it for the day.
I think so.
Awesome. Alrighty, guys, you have an amazing day. I hope this was instructive. We'll be back on the next episode. I think we might go maybe over the closing costs, and that would be something we can break it down further so you understand.
It won't go quite as long.
No. Alrighty. Thank you so much, Kelly. Have a great day. Thank you, guys.
Thank you. You too.
Bye. Yeah, that was